Alright, welcome back everyone. Let's talk about everything going on. Alright, first of all, not financial advice. Consult your licensed financial advisor before doing anything. Stocks, anything, everything is extremely volatile right now. We're living in extraordinary times. Do not invest in anything you're not willing to lose or lose sleep over. And have your stops in place, emotions out, or not have your stops in place because it's volatile. Anyways, what am I going to talk about? We're going to talk about oil. We'll talk about gold. We'll talk about mining stocks. I'm just going to go through like all of the news. I haven't made a video in a few days. Things are definitely getting interesting. Very, very interesting. So, gold is back up. It's at 1743 right now. Overnight, it hit, I think, 1760 or 58, and I think this is really it, guys. This summer, I've been saying it for weeks. I know metals dipped when the market crashed 30%, but that was expected, right? I talked about that happened in 2008. It happened again. But check this out. It's already, the miners have already, a lot of them have recovered. Not all of them, but they will. Whatever's left behind, doesn't matter. GDX did over 100% in the past 5 weeks, and it's recovered and it made an 8-year high. GDXJ, okay, so GDX, if you don't know, is an ETF. It's a basket of shares of larger cap mining companies. Institutional money will always first go into the large cap mining companies because, one, they're safer, less risk, right? Less chances of something going wrong. 2, there's more liquidity, and with more liquidity you could get in and get out without moving the price too much, although the mining sector is extremely tiny. I believe Amazon's market cap, or Apple's, one of those companies, it's like larger than the entire mining company market cap for the mining companies, not gold itself. Gold itself is like, I don't know, it's probably like 8 trillion, maybe more now. Anyways, but that's nothing because the entire market cap of all equities is like 1 quadrillion or something. No, I'd say S&P is like 30 trillion. I haven't looked at it for a while. Anyways, everything, all equities, it's hundreds of trillions. Bonds are even more. Currencies are even larger. CDs, pretty large. It all totals out to like, and then there's derivatives, but I'd say 1 quadrillion for all the paper fiat assets combined with bonds and all that. Anyways, so there's plenty of money to flow into this market. What I'm trying to say is it's one of the smallest markets, and when people wake up on Wall Street, you're not going to believe like what you're going to see. Anyways, what I believe, I could be wrong, right? Anyways, GDX, it's finally catching up to the price of gold. I mean, it has a long way to go. It's still, to catch up to it, still have to, no, I did that wrong. Hold on. I'd have to move up another 83%. GDX, that ETF. I'm not saying, it's a good buy or anything. I'm just giving you guys examples here. The junior GDXJ, and there's better ETFs out there, guys, way better. I'm just using these as an example because everyone knows about them. They're the most common ones. GDXJ would be 186%. Anyways, if you would have listened to me in my past few videos, like a month ago when I bought the dip, and I said I bought the dip, and I was showing GDXJ and GDX, I mean, you could have bought GDX and right on the dip, right on the bottom, when I posted in the newsroom for free, I even made a video for free, you would have had 100% gain. And that's better than most, right? Alright, so what I'm trying to say is the mining stocks are still down around if gold was like $1,200. Right now, we're heading towards 1,800. In 1,800, there's no resistance above 1,800. So once we get to 1,800, there's no stopping it. By the way, Bank of America just came out and they said 3,000 gold, and that's mainstream, right? So if they're saying 3,000 gold, as a contrarian, you might think, oh well, then it's probably not going to happen. No, I mean, with everything that's going on today, once Wall Street realizes, I mean, for one, we printed what, 12 trillion, something like that, 10 trillion. I don't know, I've lost track. On top of everything that was printed in 2008, jobs data came out today as well. So let me show you guys real quick. I'm zooming out here. Just give me a second. Oh yeah, here's a gold to silver ratio. Silver, it's eventually going to catch up with gold, probably later, June, July, something like that. But here's all foreign currencies all around the world, all the major ones. They are hitting new all-time highs in gold still. And the FOMO's really starting to pick up globally. The US, I mean, their heads are still up the rear end. I mean, Wall Street just started buying, right? Just started buying GDX, larger cap mining companies, right? But the rest of the world is, their gold price is at all-time highs, record all-time highs. We haven't hit that yet, but we will very, very soon. And that could happen like one day, like today. By the end of today's close, we could it could happen if the futures break, and they will eventually. So here we go. Here's a monthly chart of gold. Look, there's nothing stopping it. Once we get above that line, there's no resistance. It could just keep going and going and going and going. And I feel like if we get back above 1,800, which could happen today, futures paper market manipulation, it breaks. And once that happens, it goes limit up, right? Because they can't meet delivery. A good example of that, well, an opposite example, because it's different with the oil market. Oil went negative, right? They would pay you to take oil off of their hands because of well, it happened with an ETF, but huge opportunity with oil as well if you have patience for the next 6 months or longer. But and that's for the private group, right? By the way, let me plug 20% off right now because I see that the metals market, the miners are going to explode. If you're thinking about, joining the private group, now's the time. It's not later when it's really taking off. And this time it's going to happen. I know I said that earlier this year. Of course, I screwed up because I didn't think because gold was so strong, I didn't think that the mining shares would drop so much. And they did, but they're recovering right now. And they're going to make new highs in the next few months. All right. And it could happen really quick. And that's what I'm trying to say. Because you could wake up the next day and maybe war broke out because of oil. Maybe China dumped some treasuries. Maybe the futures paper market breaks. And people can't get their hands on physical. If you can't get your hands on physical, and you don't want to buy the futures because you know it's pretty much BS, or you don't want to buy SLV or GLD because those aren't backed either. I don't believe. I've heard rumors. Okay, I don't buy those. Then the only thing left is mining stocks, and you don't want to miss the boat on that because once you do, it's I don't know. I don't know what to tell you. So this is what I'm looking at right now, guys. This month could end higher, above 1800 for gold. And then silver will catch up, you'll see. And that'll happen quickly as well. And then mining stocks, I mean, you're just going to see 100% moves like day after day. It just happens really quickly. Like you wait, I've been waiting. So when I started accumulating, it was 2015. Okay, some of you don't have patience. You're like, I can't stand this. I've been waiting for weeks. Oh my god, I've been waiting since 2015, and I first initially got into the gold space back in 2007. I wasn't trading then. I was young and I was just buying stocks, but I started trading later, like 2010, 11, whatever. But patience, guys. The Warren Buffett, he has some great quotes. I mean, the guy's smart. And money transfers from people who are impatient to people who are. And I'm willing to wait since 2015 for just 3 months of upside in mining stocks. Because it just happens really quickly and you just see unbelievable wealth transfer, right? Now, and then, there will be huge corrections and pullbacks, and that's when I load up on some more physical or I, go buy real assets in the real world, right? So this is what gold looks like right now on the monthly. I don't I don't even think we're going to see a dip because we just had more job data come out, and Shale's going bankrupt. They have to bail it out. The bailouts will be endless. They're going to send more checks to people. The small business loans wasn't even enough because the big corporations and hedge funds swooped it all up because of loopholes, and because the banks are helping their buddies out. That's what's they're waste, fraud, and corruption. It's always towards the tail end of an empire, and we're seeing it live, guys. Um, and everyone's grabbing for the free cash, the stimulus. And I wouldn't be surprised if they do 2 more rounds of small business loans. Because, I mean, the fallout. Now, the only reason this is so bad is because it was a freaking bubble. But the fallout from this bug that's been going around, which was, like I said, guys, Sweden. They're going to have herd immunity in 2 weeks from now. Um, Listen, the economic ramifications of this is going to take out way more people than this wicked bug going around, this wicked flu, right? So that's what I've been trying to say this entire time. Now, in the beginning, I was freaked out myself because I saw videos coming out of China, right? But that made me think that the only way they would lock down their entire economy is if this thing was really, really dangerous, which it probably is. But there's different strands. I don't want to get into it, but I don't think it's that bad to the point where you blow up everything and you. I mean, we're going to probably see massive inflation. Supply chain's already broken. Oil industry is pretty much going to go bust. Not just fracking and all that, but we're talking about the big oil producers. The U.S. cannot let that happen. They've been the number one oil exporter for the past couple of years. Well, that's going to go away real quick. Now, there's more behind the scenes of what's really going on. There's economic warfare. OPEC, Russia, Middle East, Saudis. I mean, there's rumors out there that they plan this because why would you have an oil war when you're locking down the global economy? Like, pretty much bringing it to a halt, locking everyone up. Why would you do that? To make the U.S. energy independence go bust. And that, in a nutshell, kills the petrodollar and just blows up an empire. All right, that's what's really happening behind the scenes. And I wouldn't be surprised if this is all planned. China, they maybe I don't like I said, I don't know if it was planned or not, but probably. But they're definitely taking advantage of this every way humanly possible. They didn't warn the U.S. or the rest of the world, so it weakens us and them and Europe and everyone. And they're hoping they come out of this stronger than everyone else. Believe me, that's their agenda, the 2050 agenda, whatever, for China. So, and it's disgusting. The rest of the world how they're adopting. We've got drones flying around, people just getting arrested in parks, and it's just absolutely disgusting. But I talked about that last time. Have no fear. 7 billion people are really, really pissed off. And we're seeing how many people are losing their jobs. Today it was another 4 something million. They'll probably revise it later. I think all in the end, guys, by the end of this year, we might see. It's definitely going to be over 30 million people losing their jobs, but I wouldn't be surprised if we start hitting 40, 50, 60. And if we hit 60, God help us. I mean, they're going to be cutting welfare checks like endlessly, like $2,000 a month, just to keep the people from going out in the streets with pitchforks and torches. I'm telling you. And believe me, you're going to see inflation. It's mathematically impossible you won't. Definitely for everyday goods, food, stuff like that. All right, where was I? Gold. Let's get back to it. So yeah, take advantage of the discount now. It ends Sunday night. If you're thinking about, if you have a little extra money, I mean, you just got $1,200. If you have a little extra money, you want to risk it, and I mean risk it. You could lose it all, but you never know. And you want to risk it with some mining stocks. That's what the private group's for. You'll learn how to trade. I show you guys what I'm doing, and then it's a smart group. There's 160 people, something like that, in the private group, and you're gonna learn a lot. All we do is talk about opportunities. You can't make any promises, but you're gonna learn a lot. And I think there's some really awesome opportunities. All right. All right, here's another chart I want to show you guys. So the candlesticks is gold. The purple line is oil. Oil futures and gold futures right here. Weekly time frame. Every candlestick represents a week. All right. So you can see right before the 2008 2009 financial crisis, oil just went on a tear. I mean, it ripped all the way up to 150 bucks. That was the all-time high, or 145. And I remember because I was still in college, and I'm like, what is going on? I can't afford gas. And gold went up with it. And then we had the financial crisis. Both crashed. And what happened at the bottom? They came out with endless stimulus, QE, to put in the bottom to the market. And they bailed out oil back then too. They got some stimulus. And what happened? The price of oil went up. And so did gold. You can see that correlation right here. This was the bottom for both. Boom. It went up. And both sold off. We hit the bottom in gold in 2015. 2015, we hit a bottom in oil. Now, I know oil has crashed and we made a new bottom. But, you know, it's also because of the circumstances, right? There aren't that many people driving around. Everyone's, locked up. But the lockdowns are coming off, right? For the U.S. at least, and then we're going to see Europe. And they have to. It's either that or people are going to be... There's going to be civil unrest, all right? So, and we already see it. So, they're going to have to take down the lockdowns. And they will. They have no choice. No matter what. And when they do, eventually it's going to come back, the demand, right? Speculators will drive up the price as well for oil. Now, if oil's going up and these are highly correlated, that means because gold is it's much, much stronger. Listen, guys, during this crash, this 30% crash in equities, and some stocks went 90% down, gold didn't go down much. It went down like 12% or something. That's nothing. That was a dip. So gold is this strong, right? And oil crashed. So when oil comes back up, we can see a correlation of gold going even higher, making new highs. Just like Bank of America just said, gold 3,000. Now I think gold right now should be 3,000, heading for 5. And imagine how the earnings are going to look for all these mining companies. Now, a lot of these gold bugs are like, you got to do your due diligence. And believe me, I do. Like the people in the private group, they see, I look at balance sheets, guys. I look at cash flows. I look at EBITDA. I look at it all. All right. But a lot of people are very scared of mining stocks because they went through this giant bear market. Guys, when gold is above 2,000, no one's even going to look at the balance sheet. I mean, you should look at them. I look at them. But everyone's just going to look at how much do they have in the ground, their reserves. In the end, that's all that's going to matter. So a lot of these mining companies are just going to explode in price. It doesn't even matter if they don't have cash flow. Like it's going to be like a wild bull market where the crappiest stocks, or people are just going to front run them because they know larger mining companies and royalty streamers are going to come in and they're just going to start buying up, and they're going to get financing from the banks, and they're just going to buy up all the crappy mining companies. And then when they buy them out, your shares go up, and then they convert the shares to the company who bought them out. And it's going to be wild, and it's going to be sweet. So I'm excited. And I've seen that. I've been through that. I saw a little bit of that in 2016 as well. All right, so you guys get the point, right? Here, all right. So let's talk about broad equities, this and that. Um, well, let's take a look at the 10-year yield. So I don't know when this bond market's gonna blow up, but when it does, there'll be no safe haven besides metals. And because when the bond market's blowing up, your dollars are gonna get devalued, and equities are gonna drop as well. And then you're not gonna go into bonds because bond market's blowing up. It's been in a bull market. Yeah, the yield's gonna spike and go up really high, but the yield's not gonna make up for the inflation. And not just that, the Fed's going to attempt to cap it. I mean, they're going to do another 10 trillion just to keep the 10-year yield, like, who knows, below like 1.8 or something. The goal of the Fed is to keep yields literally below 1.6. All right. That's my opinion. Here's the Dow Jones monthly chart. All right. So this is either, dead cat bounce and then it just goes, whoa. But I don't think that's going to happen because the Fed's going to do anything they can. Now, I don't know how long, right? So the world, believe me, guys, the world is not a nice place. I know Americans have been living so comfortably and they haven't gone to other parts of the world. And yeah, there's nice people. Most people, majority of people on the planet are nice people. They're average people. They just want to work and feed their families and just live a normal life, right? But the world is a dangerous place, and other governments, they don't want to see the U.S. stay on top. Believe me. Um, so things can get wild, especially with this oil war and the fact that oil is, I mean, it's positive now. It's still around. I haven't looked. But historically, and if you don't, he did a good video on this, Mike Maloney. Just go to his, look at his last video. Historically, when this happens to energy and oil, you're, the world gets very dangerous. Let's just say that. All right. And there's proof. There's naval, like, they're taunting each other, even in the air. Every day now, I hear that a jet from this country and that country, right? Um, and Trump was tweeting, if anyone harasses our boats, and they're doing it now in the Middle East, we'll just shoot them out of the water. um, and that could escalate very quickly. All right, and it's strange times, guys. So that's also positive for metals. And it's actually, that would cause oil to rally because there'll be demand issue, or there'll be a supply issue because, let's say, any of those major countries in Iran or in the sandbox like Iran stop producing completely. Let's just say if something happens in the sandbox, oil's going up. And that would cause another dump in the market. Or let's say it's all about timing, guys. It's hard to predict. It's super volatile right now. Or let's just say all this stimulus and the front running to everything opening up, everyone thinks that everything's going to go back to normal. It's not. I mean, we lost so many jobs that causes this death spiral where more people lost their jobs. They're not going to spend as much. More businesses go under. They fire more people, and so on and so on. And that's what a depression is. But they're going to cut checks for everyone who lost jobs. A lot of people are actually making more money by not working, which is horrible. That is socialism, and that always ends in breadlines and starvation. Anyways, so, the market, dead cat bounce, or a bull trap, return to normal, and then possibly something like this. or even this. I don't know because I can't predict the future. I'm not a prophet. Or they actually reinflate the bubble. And we go into that major blow off top. And that could only last another 6 months, a year, maybe 2 years. I don't know. But if this happens, when the final crash comes, I mean, at this point, if this does happen, then we're looking at like Venezuela's type of stock market rise, where your stocks are going up and up and up and up, but when you sell those stocks, it doesn't matter because you sell them for dollars, and believe me, the dollar will be sacrificed in a really big way. Okay. Now, another reason that the markets could make new all-time highs would be capital flight, continuing outflows from the rest of the world into the U.S. market. And a reason why I'm thinking that might be actually very possible, is because the Eurozone is going to break up, in my opinion. I mean, you already see it. By the way, the reason they created the Eurozone, right, and this, all the countries are together, is to help each other during times of crisis. Well, we just had a times of crisis, and everyone just, and no one chipped in and helped each other. They just all looked out for themselves. And the other countries, the southern ones in Europe, they're so bankrupt. I mean, and they just announced QE Infinity as well. Helicopter money. The ECB announced helicopter money yesterday. All right, let's move along here. Let's take a look at the dollar. I explained my last video very thoroughly why we're going to get inflation and deflation at the same time. Big ticket items, homes, cars, which have been a huge bubble, they're going to lose. They're going to fall in value, I believe. Smaller things to survive, everyday items, they're going to shoot through the roof, especially with a broken supply chain. Now, the supply chain, I'm hoping it's never going to be the same ever again. I mean, it's just going to be harder to get everyday things, from computers to jeans to food, you name it. Everything that came from China. Now, this relationship with the U.S. and China, it's been very great for the past few decades. It's allowed the U.S. to actually not have inflation because all of the cheap labor and goods from China masked the inflation. No longer will that happen for going forward from now on. If you ever bought any American good, usually it's better quality, but it's way more expensive. All right. Or European goods especially. So get ready for that. The dollar. Here's a chart of the dollar, daily chart. Look at this swing. Look at this. This is insane. That is almost a 10% swing in the dollar within a week? That's not good. Well, that's a sign of weakness. When was the last time we saw a swing like that? I don't think we ever have. I mean, that's insane. Yeah, I don't see anything. I mean, all the way back to 2000. I mean, we've seen some huge swings, but if I zoom out here, we've seen volatility to the upside or the downside, but we've never seen it go in both directions within a short period of time, right? Again, we're at 100 on the DXY. This is dollar versus other fiat currencies. Can we break above 100? Yes, I believe when the euro finally cracks, which is really good for Americans, for us, because that's going to give us a strong dollar. Meanwhile, metals are still going to keep going up and up and up, which will give us this window of opportunity. I don't know how long it'll be open. Maybe it'll be open for 6 months, maybe a year, maybe a couple years. That'd be amazing. That'd be great. because that means we could cash out on take some profits, let's say from mining stocks, right, or from our trades, and buy up real world assets like some land. I don't know, whatever you need, vehicle. You can take advantage of home prices and car prices falling while the dollar is still somewhat strong versus other fiat currencies. And at the same time, metals are still going to make new all-time highs. It's a really nice opportunity. I couldn't have asked for anything better. So, I don't agree with everything that everyone says. Like Schiff, he keeps waiting for the dollar to like implode, and I don't think it's going to happen soon because there's bigger troubles in Europe, right? Because once they break up, I mean, they're going to go back to their own currencies because they need to. They need to break up the euro, all those countries, so they could print even more for themselves to bail out their own industries or failed banks, failed, entitlements, whatever. So they have to break up. All right, guys. Where am I at? I'm at 36. What did I want to talk about? All right. So the Fed is monetizing everything. Monetizing is kind of like a fancy word of saying they just print and then they pay everything with newly created money, nothing backing it, nothing. Okay? Out of thin air. Ones and zeros. Okay? Here is a breakdown of the 12 trillion in global stimulus passed this month. 12 trillion, I bet in the next 2 months it'll be 30. Highest range. I'll say 25 lowest. All right. I highlighted some stuff. Global policymakers have not only cut rates 65 times so far in 2020, but also pledged some 12 trillion, 7 trillion in monetary, 5 trillion in fiscal stimulus to reduce volatility and credit spreads. Actually, this is old. Weimar America, here we come. The bug adds 10 trillion to national debt. That's unbelievable, guys. Unbelievable. I mean, the amount of debt, everyone keeps ignoring it like it doesn't matter until it does. And when will it matter? When they have to keep printing just to pay the interest. It's literally like you maxed out a credit card, you lost your job, but your credit is still okay, so you get another credit card to pay off the previous, but the interest rate on that new credit card is even higher, and then you get another credit card, but then your credit starts dropping as you do this more and more, and then eventually they won't even give you a new credit line, and then you're done. That's what's happening in a nutshell for Six Pack Joe, so you could understand. That's all it is, guys. 8 phases of crisis. I really want to do an in-depth thing on this, but I'm so busy trading, and I've got all kinds of things going on. The private group, this and that. The warning, the event, disbelief, panic. I feel like we just came out of panic. Heroism, your nurses, doctors, but now they're doing TikTok videos, which is I don't want to get into it. And then the cliff. We hear about this, and then disillusionment. We're not there just yet. We're right before the cliff. We're actually right around here. I'll post this in the newsroom, links below this video. After disillusionment's rebuilding. I feel like we're at this like fourth turning where What that means is people are losing faith in their institutions, the control structure, which is good, I think, for the long term, for freedom, for humanity, for us Gen Xers and millennials. Because these boomers, they really screwed everything up. Alright, guys, let's, how much time do I have? I already went over 40. I'll try to keep it under 40 now. Shocking new data shows, God. 565 Americans have lost their jobs for every one bug fatality, and those are probably inflated, the numbers for the people who were victims of the bug. Okay, so one victim, 565 jobs. Yeah. New data shows explains why corporate America is incompetent. We all know that. By the way, it's unbelievable. Apple is still doing, with the stimulus they're getting, they're still buying back their own shares. Do you understand all of this stimulus is paid by the poor, middle class, and the lower? Even the poor who don't pay tax. You pay with it through inflation. That's why when you go, maybe a couple years from now, when you go to buy a loaf of bread and a carton of eggs and a milk, that'll cost you $100. Unprecedented damage to Eurozone, PMIs. Yeah, I'm telling you guys. Food shortages, and this was bad. This was bad before all of this happened. This was a problem towards the end of 2019. Like most pigs died in China. Auto producers, I don't know what's going to happen to them, guys. I mean, they're going to get bailed out too. But how are they going to make more vehicles? There's already too many. What might end up happening is foreigners come in and just buy all the used cars in the US for pennies on the dollar. Kind of like a repossession of our goods. I posted this on Twitter. If you're not following me on Twitter and you're not in the newsroom, you're really missing out on good stuff. Between my videos. There's just a lot of crazy stuff going on. Now, I don't want to get into how oil went to zero, this and that. I don't want to make too long of a video. But it's pretty much the opposite. I'm not going to get into it. Just read up on it. There's plenty of articles. Go in my newsroom. So, like I'm telling you, during crises, this could easily lead to a world event where the US dominance is going to be challenged. That is my biggest fear out of all of this. And historically, that's what happens. It just does. All right? And they'll do it because they need to get people's attention away from domestic issues. Okay? And it's very worrisome. And I definitely do not want them becoming the next world power, because let's just hope that they fall apart from within as well, because they have they have ghost cities, guys. Ghost cities. 1/3 the size of New York City. Replica of it. And France. Look into it. It's all on. Look up some drone footage. It's insane. It's wild. Mitch McConnell, struggling states should file for bankruptcy. I'm actually proud that he said that, because I was worried. Listen, guys, what happened with the stock market, this and that, it pretty much blew up pension funds for all the states, and there's so much unemployment, the states have literally gone bankrupt. But they're gonna bail them out. They're just gonna have to. I hope they don't. They shouldn't. By the way, bailouts is not free market capitalism. That's exactly the opposite. That's socialism. Commie. So, just so you know, I keep seeing all these parasites. Weak men. Again, the good times create weak men. Well, no, let's start off properly. Strong times create strong men. Strong men create the good times. The good times create weak men, and weak men love socialism because they want to be taken care of. They want that nipple, right? And I keep seeing it all over social media everywhere. The parasites, because that's what they are. They keep trying to blame free market capitalism on all this. Mother effers, we haven't had free markets since 1913. All right, the U.S. is already socialist. It really is. What we have here is crony capitalism mixed with socialism. We have just monopoly banks and corporations that pretty much rule everything, and that's not free market capitalism. Free market capitalism, you wouldn't have monopolies because you would have high competitiveness, but we don't have that because the big monopolies, they own the politicians. It's that simple. And then they create all these regulations, and then the small businesses can't rise to the top or even to the mid-size to compete with the large monopolies. Not just that, these monopolies get free subsidies. Who pays for subsidies? You, the peasant. All right. Well, on that bombshell, go to my website. 20% off. And I'm pretty confident we're going to see some fireworks finally in these junior caps and these mining companies. And there's other opportunities as well. There's some opportunities in oil. I haven't shorted in a while. Well, I put on one more position, but there's so many opportunities. When it's volatile, there's opportunities. The biggest opportunities are now. So now's a good time to learn to trade. Smash some likes, leave anything in the comment section, share my videos. It's the only way my channel grows, and I'll continue to do this. Until next time, peace.